Welcome to Pro Webcast News, where we bring you daily industry updates. Today is Tuesday, May 11th, and you're watching the Afternoon Update with Paul Wilson. Today's news is sponsored by American Retirement Systems, providing competitive solutions for agents and advisors. For more information, please visit AmericanRetirementSystems.com. Now for today's headlines. U.S. regulators will adopt new market-wide circuit breakers to help break calamitous drops of individual stocks, according to reports today. The move comes 5 days after a dramatic market plunge that grabbed the attention of investors and regulators alike. The circuit breakers are expected to trip when individual stocks fall by a set amount in a set time frame. The U.S. Securities and Exchange Commission hosted several exchange heads yesterday at a meeting in which the parties came to an agreement on a framework that would help bolster the circuit breakers. In investment news, American millionaires are beginning to feel more confident about their financial futures, but their sense of security has yet to reach pre-2009 levels, according to the 11th annual Phoenix Wealth Survey conducted by Harris Interactive. In 2009, high net worth consumers experienced a negative wealth effect, with 74% of respondents feeling less wealthy than they had the year before. But confidence has improved in 2010, with just 52% now feeling less wealthy compared to last year. Meanwhile, 28% of respondents said they are either very or fairly pessimistic about the future of the economy, an improvement from 40% who felt that way last year. However, when respondents were asked to agree or disagree with the statement, "the recession is over," just 26% said they strongly agree or agree with the statement. Finally, the percentage of affluent investors with a written financial plan reached an all-time high in 2010 at 44%, while 79% said they received professional financial advice on a regular basis, up from 39% in 2009. In insurance and P&C news, insured losses from the recent Deepwater Horizon drilling platform explosion and the resulting collateral damage to the environment and impacted businesses is expected to total around $1.4 billion, but are not likely to significantly impact this niche market or buying behaviors, according to industry officials. Companies with exposure to the disaster are insured for losses totaling approximately $1.4 billion, according to reports from those involved. According to Robert P. Hartwig, economist and president of the Insurance Information Institute, quote, "The insurable losses from the sinking of the Deepwater Horizon will be significant, and one of the largest losses over the global offshore energy insurance and reinsurance markets. The risks inherent in carrying out such a complicated endeavor, however, are well syndicated, with the insured loss spread across a broad spectrum of insurers and reinsurers on a global scale," unquote. The most expensive oil spill in U.S. history was the Exxon Valdez incident in 1989, in which 10.8 million gallons of crude oil was released into Alaskan waters. In that case, cleanup costs alone totaled $2.5 billion. Hartwig said that while insurers paid hundreds of millions of dollars in connection with that disaster, Exxon ended up paying the majority of losses. He added that the larger the loss from the most recent incident, the greater the share that will be paid by BP. I'm Paul Wilson, and thanks for watching Pro Webcast News. For more in-depth news and features, visit producersweb.com.